This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, April 27th, 2015. Euro dollar. So the euro remains locked within a consolidation over the past several sessions, though the market is also locked within a more well-defined downtrend. At this point, only a break back above 1053 would compromise the current bearish outlook, with a lower top sought out somewhere ahead of 1053 in favor of a fresh downside extension below the recent 12-year low at 104.62 and towards parity further down. Really, only a break and close above 110.53 would compromise the bearish outlook. Sterling dollar. So cable has seen some nice gains over the past several days, with the market rallying out from fresh multi-year lows at 145.65 to trade back above some key resistance from the 18th of March at 151.65 in the previous week. With the break, there is now room for additional upside towards the 78.6 fib retracement off of the 2015 high-low move, which comes in at 53.40. Again, the downtrend here remains firmly intact, while below the high that we saw back on the 26th of February, the 2015 high at 155.52, and only back above this level would compromise the bearish outlook. But there is room for additional upside over the coming sessions towards that 78.6 fib retracement at 153.40. Dollar yen. So dollar yen has come back under pressure in recent trade, with the market now coming back down into the 118s and looking like it potentially could retest that key support at 118.23 going back to the 17th of February. At this point, the market remains constructive despite the consolidative trade above 118.23, with a medium-term higher low sought out ahead of the next major upside extension beyond the 7-year high from earlier this year at 122.03 and towards the 125 to 130 area further up. Ultimately, if we do break below 118, this doesn't do anything to change the structure, and a break back below 115.55 would be the only thing that would be required to shift the structure and put the pressure back on the downside. Euro Swiss. So Euro Swiss has done a good job of recovering in recent trade after the market had been under pressure since February, trading all the way down to the 102.35 level. At this point, the bullish reversal that we saw last week could set the stage for a medium-term higher low in favor of a resumption of gains, eventually back towards that critical 108.15 high that we saw back on the 20th of February. Only back below 102.35 would negate this recovery outlook. Aussie dollar. So Aussie has been recently has been well bid in the past several sessions, though the market is still locked within a well-defined downtrend off that recent multi-year low at 75.33. At this point, any rally should continue to be very well capped, while only a break back above 79.38 would delay but not negate the bearish outlook. Dollar CAD. So dollar CAD has seen some trading lower over the past several sessions since breaking down below some critical support that was in place at 23.50. The break below 23.50 doesn't do anything to force a shift in the structure, but does open the door for deeper setbacks towards a measured move objective potentially in the 119 area, from where a medium-term higher low is sought out in favor of the broader bullish outlook for this market. At this point, a break back above the high that we saw at 28.35, the 5-year high from earlier this year on the 18th of March at 28.35 is favored for a break and test of the 2009 peak at 130.65. But again, there is scope for additional corrective downside towards the 119 area over the coming sessions before the market looks to put in that fresh medium-term higher low. Kiwi dollar. So Kiwi has been basically gradually trading higher over the past several weeks since basing out by 71.76, but again, the move higher is still classified as corrective within a broader downtrend in this market. A lower top is therefore sought out ahead of a bearish resumption back below 71.76, while ultimately only a break back above 78.90 would delay the bearish outlook. SPX 500. So the S&P 500 has broken to fresh record highs, but just breaking to those highs last week, just over that previous February peak at 2120. Right now, the record high comes in just over 2120 at 2121 at the time of this video. And if the market can establish a daily close above 2120, then there is risk for some form of a top up here in favor of a bearish resumption and potentially a more significant top. If, however, the market establishes a daily close or maybe maybe even a weekly close above 2120, this would suggest a fresh upside extension towards the next key measured move objective at 2200 further up. But inability again to establish above 2120 will set the stage for a bearish resumption and a potential retest of that critical support now that comes in place that comes into play at 2040 further down. A break below 2040 would open the door for a significant shift in the structure. Gold. So gold has done a good job of being supported ahead of some key support at 1178. Although we did break below 1178 last week, the market wasn't able to close below 1178, and so the pressure does remain on the top side, and the bias remains to the top side for an eventual break and push back above recent highs that we saw at 1224. At this point, only a close below 1178 would compromise the outlook and put the pressure back on the 2014 base at 1131.